welcome to my YouTube channel. This is the Random Trader, and today I'm going to be backtesting CADJPY for the month of January. So since I enjoyed recording, like doing the backtesting for AUD card, especially for November, I decided to do a backtesting series. So watch out, don't stop watching. You'll see how I trade, like all the conditions that I look at. Just wait and you see how what I look at, my entry, everything. Let's go to the trades. The first thing that I always do when I get to a chart is that I look for the buyers. Like I said before, when you want to look for the buyers, you zoom in and then you check the general trend. So from down here to up, you can see that the trend is clearly bullish. If you use this, you will see here that the trend is clearly bullish. And currently, if you go to the current price action, you can see that from this low to this high, price is actually in the discount. So when we are looking for buys, as I said before, you wait for the price to come to your discount for you to actually sell. So from here, we can actually still be looking for buys. And what I'll be doing is that I'll be starting from January to February. So you can see here we are in February. After knowing the buyers, what I always do is that I go to the calendar. If you go here to the calendar, you will see that the NFP is on 6th. So from 6th to the 1st January, we will not be looking to trade any day. But then here, if you go on Monday, January 9th, you can see that it's JPY holiday and we are trading CADJPY. So it means this bank holiday will affect that JPY pair that we are looking for to trade. So we'll not be looking to trade on Monday. The day that we'll be trading is on January 10th and January 11th. Here we'll not be looking for to trade. So let's see how January 10th was. Remember, we look forward for all the rules. We go in daily and you see how the candle of 9th actually closed, so that we can look for entries in January 10th, which is on Tuesday. So in here in the daily time frame, you can see this is the candle on July 9th. Let's go in the M15 and we see how that candle actually closed. Okay, if you go there, so you can see here, this is where the Monday 9th July. Let's see on daily time frame how the candle closed. You can see here the candle actually closed bullish. So it's here, this candle closed bullish. So it makes Tuesday an ideal day to trade because the trade here started trending bullish again. So let's go in M15 and search for entries. When you go in M15, remember we do the same thing. We take our Fibonacci from our dealing range low to the dealing range high here. We'll be waiting for price to reach to 5 a.m. GMT plus 2 because that's when we search for entries. If you want to know like all the rules in deep, go in my strategy videos. You'll see I explained each rule like very clear. Let's go on and you see how the price here will be. You can see we are still on discount. Okay, let's see if we're going to get a W pattern there. Okay, we did not get any W pattern in discount just yet. Okay, price has come back in discount. Let's see if we're going to get any W pattern, which we didn't, because here we got a W pattern. If you see it, it's from here. You can see this is a W pattern with this candle here, this one going up, but it never came to retrace the trend line. No, not the trend line, but the neckline here. It never came to retrace the neckline here. You can see it just went up. Okay, you can see here it's coming back to the neckline. Let's see if the 1 hour time frame actually supports the entry. Let's go back and you see which time you can see here this is 1. So if it's coming to trace to the neckline at 1, the candle from 12 to 1, it should have been bullish for us to enter this trade. If you go to H1, in H1 you can see here this candle is very bullish, so we can okay, so you can see here, let's wait for an entry here, the neckline. We take our eye tool. Remember that our risk management is simple. We enter at a 15 pip stop loss and a 45 pip take profit. We go BE after price has gone 20 pips in profits. So that's the risk management. The risk management that you have, it will keep you in the market longer because it will protect your capital. So if you're trading a pro forma account, it will keep you longer in the market because simply you will not be having losses. You will know how to minimize so that you can have the profits that are very big enough to cancel away the losses that you're going to have. So let's go to the trade. If you've gotten this far to the video, come on, just like the video. And also, if you're new to the channel, remember to subscribe, and also remember to share it to your friends so that they can also learn in this journey or in this episode of backtesting. The market went up, going up, and most of the times when price goes up 20 pips without giving me a trace to the neckline, I always don't consider the same neckline. I wait for the price to come back here to the old neckline, and I will always wait for another neckline to be formed at that place. So if you go here, let's see if you're going to get a neckline somewhere here. We're not going to. Let's wait for another W pattern somewhere here. Let's see if it's going to be formed. So here you can see we have up, down, up, up, down. Let's see if we're going to get a retrace, like an up to close up here. See. Okay, here we got down, up, down, but then the price here you can see it's way above 8, and I always stop to trade or to look for trades after exactly 8. So here you can see we do not have any trades. Let's go back to the daily time frame and to the calendar to see if the following day is going to be a valid trading day. Let's see in 11th, you can see here in 11th we have AUD CPI. AUD CPI does not really affect our markets because we are trading CADJPY, so we can actually look for trades on this day. But then that is one condition. We always have to condition. In daily, you can see here this candle here, the Tuesday candle 10th closed bullish, it closed bearish, sorry. So it means we will not be actually looking for trade on Tuesday because the price still the price still closed bearish. This candle should have closed bullish for us to look for buy, so it means this is not a trading day. Let's see if this candle actually closed bullish for us to be looking for buys in 12th January. Okay, so here you can see this is 12th Jan. This candle here, 11th January closed bearish. It closed bullish, but then if you check on 12th January, you see we have USD. Yeah, we have USD CPI. That's why we do not trade on this day. You can see here all these moves. And remember, we're looking for buy. So this day, it would have been like very risky because CPI does not really respect how the patterns are made. So if we would have traded on this day, it would have just touched like our stop loss. Sorry. So let's see if we'll be trading on the 13th. But you can see here on the 13th, this candle closed bearish still, so it means no trading day for us here too. You can see here this candle, 16th Jan. So 17th is not really a good day for me to be looking for any entries, simply because we have CADJPY and we have CADCPI, and CADCPI really, it's a low probability day to look for trades. So I'll just pass on this day and wait until the following day. If you go to the following day here, you can see, let's see how this following day is also not a trading day, because you can see here Tuesday 17th day closed bearish, and also this day 19th, it makes it invalid for us to be looking for trades too, because this candle here, you can see this big candle, it closed bearish too, so we'll not be looking for any trades on this day. Let's see if this candle actually closed bullish for us to be looking for any trades on 19th January. No, not on 19th, but on 20th. Okay, so you can see here this candle closed bullish, bearish, so we'll not be looking for to trade on this day. But let's see if this candle actually closes bullish for us to be looking for trades on Monday, which is 21st Jan. Okay, you can see this day closed bullish, so we can be looking for buys on 23rd Jan. But if you look, let's go in the calendar here, you'll see that on the calendar, if you go to 21st Jan, if you go to 21st Jan, let's go here, it's not 21st Jan, but it's on 23rd January. If you go on 23rd January, you'll see here this is a valid trading day. So let's go in 23rd January in M15 and we see how that day was, and how, if we even got an entry on that day, because we can only get an entry after we get a retracement in M15. Let's go in the M15 and we see if we had any entries on that day. So here we have the M15. We do the same thing. We draw a Fibonacci. We draw a Fibonacci from this low to this high here. So it's not this low because we have this low here. So it will be this low here to this high. And we'll be waiting for price at 5, because that's when we look forward to trade. Okay, so let's put it up here. So from here, the price is not really, it changed, because here we have another low. You can see this liquidity that was taken. So we have another dealing range low, something like this, from this high, but this high was taken. So we keep on, you always adjust. If it takes the high, you keep on adjusting it. If it takes the low, the same way. Like the dealing ranges always changes. It does not stay in one fixed point. See? So here we're not really getting any solid retracements. So we'll not actually be looking forward to take any trades on this day. You can see here it's almost 8. And remember, I always stop looking for entries at 8. And here you can see we finally have another day, which is 24th Jan. And from the way price is actually going up, you can automatically see that on the daily time frame, on the 23rd, you can see here clearly that this candle closed bullish, so we can look for trades on the 24th. And even if we go to the calendar here, you can see on 24th, we don't have trades that affect USD or CAD. They are all the type of news. I said all of them in the previous videos. You can always go and check, and you see which trades I don't actually, which days that make me stay out of the market. So let's go back to the M15. What I always do after going to M15 is that I do my Fibonacci from the dealing range low to the dealing range high, and then I wait for the W pattern to happen in the discount. Here you can see W pattern is already here, low, high, low, high, and here we have our neckline, but this it's in premium. So we wait for another W pattern that will form here in discount. Let's wait for the market to play out and we see if we're going to get another W in discount. Okay, so here from here what has already happened, you can see we have a low, we have a high. Let's see if we'll have another bearish candle again. There is the bearish candle. Let's see if that bearish candle will close above this neckline here. This neckline here. Okay, so you can see this candle here closed up. So before getting any entries there, before getting to have any entries at specifically here, let's see if previous H1, and here this is from, we check the H1 time frame. You can see here this is at 10. So the candles from 9 to the candle from 9 to 10, it needs to have closed bullish for us to look for any retracement entry back at this neckline. If you go to H1, you can see here the candle from 9 to 10 has actually closed bullish. So any entries at from 10 to 11 are valid. Let's go back to our M15. So in M15 here, we'll do the same thing. We just take our buy entry and we just enter from here. Buy entry. Let's see how the markets here will eventually play out. Okay, there we're already in the trade. Let's see if it will go to stop loss or take profit. But remember, we set where we're going to go BE, that is 20 pips above, which is somewhere here up. Yes, there are 20 pips. So here you can see here, we're going to go BE. Here we're already in break even and price has retraced back. Let's see if it will take us out of BE there. So you can see here, price did not really take us out. If I zoom in, you'll see price did not, because our entry was down here. Down here, you can see it came really close. That's why you need to be really careful when it comes to you setting your entries well. It needs to be exactly at the neckline. So this one is down. That's why here it would have not taken you out. Let's see if it eventually goes. Yeah, and you can see there it goes to take profit. So you'll be having 3R for this trade. And remember, after me having a take profit hit, I don't trade the following day. So here you can see the following day would have been, when was that? Here we're on 24th Jan. The following day would have been on 25th Jan. I don't trade on that. Let's go back in the daily time frame. To go in the daily time frame, let's see if you go in the daily time frame, we will not be trading 26th, because you can see here this candle actually closed bearish. So we'll not be looking forward to trade on this day. Let's see how the following day was. Okay, so you can see here the following day, here it's on 26th. So if this day closed bullish, let's see if 27th is a valid trading day to trade. If you go on 27th here was on Friday, and remember, I don't trade Fridays. So the only trading day that we had here, so you can see from the calendar, the only trading day that we have here is on not in February. We're still doing the backtesting for specifically January. So the only trading day that we can look for entry is on Monday and Tuesday, January 30th and January 31st. Since January 27, you cannot trade because I don't trade Fridays. So let's see on January 30th and we see how that day actually was. So after confirming that January 30th and January 31st is a valid trading day to trade, it will only make it valid again if the daily time frame actually confirms it. And the daily time frame will confirm it if the previous day of both days actually closes bullish. You can see here on January 30th, the day before that, which was on Friday, it closed bearish, so it makes this day invalid. And January 31st is not a trading day simply because January 30th, which is on Monday, actually ended up closing bearish. So the only trading days, that is the end of January when it comes to the backtesting. And let's see if you traded this month following all the rules, you would have only traded one day in 30 days. That is very, very much surprising because I know people who actually open 100 trades. But having rules, having restrictions, it will restrict your days. You only be trading few trades, but then trades that are trades of a very high probability, and trades that are of A plus, of a very high quality. So you can see here, you'll be making 3R for 1 month. And 3R for 1 month is really great, as you all know that 99%, it's even 95%, let's make it realistic, 95% of traders in these trading markets are failing. So you making 3% per month, you are way ahead of other traders. So this 3% per month, it's very good. And if you can keep on going on making like 3% per month, it will take you like 3 months, even 2. But then this is only 1 pair. Remember, I trade 3 pairs. I trade 2 to 3 pairs. So the maximum that I can make in a pair, I can even make more than 6% in 1 pair. But remember, I trade more than 3 pairs. So in 1 month, you can see that I end up making 6% or even 3%, or I even make less than negative 1%, depends on a good month. But then in all the months, from January to March, what I know is that I will always be profitable because I have an edge in all my pairs. So what I will do is that I will first be backtesting CADJPY January, February, like in all the 12 months. Then after, I go to another pair, which is AUD card. I will also backtest that. Then after that, I will do the analytics of those 2 pairs, and you see how, if you traded those 2 pairs, how many P&L would you have gotten for the whole year, and you see if this strategy is specifically profitable, because you see how it keeps on being consistent month after month. So from all this, I'll be releasing the backtesting videos on Wednesday and on Saturday. So be always on the lookout. On those days, I'll be releasing backtesting videos. So yeah, if you have learned in this video, be sure to like, and also don't forget to subscribe. See you on Saturday, where I'll be going through the backtesting of February when it comes to CADJPY. Until next time, it's your girl, the Rwandan Trader. Bye!